Welcome to this second video about the key trends that are shaping the future of the payment industry. You need to grasp a few basic things to understand the biggest forces driving the current changes in the payment industry. My goal with this video is to reveal the secrets you need to know to advance your skills, expertise, and career to the next level. The previous video was about open banking, cryptocurrency, and tokenized payments. If not done yet, watch the previous video to discover the secrets I revealed about these topics. In this video, we'll explore two other significant trends that are crucial for understanding the future direction of the payment industry. The migration of SWIFT to the ISO 20022 messaging standards and the development of one-leg-out instant payment schemes. Are you ready to unlock the secrets behind the payment industry's evolution? Let's begin with the first topic: SWIFT migration to the ISO 20022 messaging standards. If you work in cross-border payments, you have probably heard about CBPR+. CBPR+ stands for Cross-Border Payments and Reporting Plus. It is SWIFT's program designed to facilitate the adoption of ISO 20022 standards for cross-border payments and reporting messages in the correspondent banking space. This initiative will modernize the messaging infrastructure by replacing the legacy empty messages with ISO 20022 messages, beginning with the coexistence phase in March 2023 and concluding in November 2026 or later for payment messages only. During this coexistence period, financial institutions can transition to the new standards while still operating with existing empty messages. CBPR Plus also provides a comprehensive set of market practice guidelines to ensure the consistent and effective use of ISO 20022 messages in cross-border payment processing. CBPR Plus is and will certainly remain one of the hottest topics in payments during the next decades. There is an important secret to know about the SWIFT migration, but before telling you what it is, I need to draw your attention to the fact that the migration to the ISO 20022 is a global movement. All over the world, countries and regions are moving their payment schemes and market infrastructures to the ISO 20022 message formats. Let's take a closer look at a few examples. EBA Euro 1, a high-value payment scheme in Europe, moved to the ISO 20022 message format in March 2023. T2, the RTGS for urgent and high-value payment in Europe, also moved to the ISO 20022 message format in March 2023. In Canada, the high-value payment system links and the real-time rail payment system moved to the ISO 20022 message formats in March 2023. SEPA schemes have been using ISO 20022 message formats since the beginning. In Switzerland, implementation guidelines of the SIG platform have been based on the ISO 20022 messages since many years. In the United States, the FedNow service adopted ISO 20022 when it launched on July 14, 2023. The Federal Reserve's Fund Fund service is expected to complete its migration to ISO 20022 in July 2025. As of now, over 70 countries have adopted ISO 20022 messaging standards in their payment systems. This includes major economies like Switzerland, China, India, Japan, USA, Europe. The widespread adoption of ISO 20022 is aimed at enhancing the efficiency, interoperability, and data richness of financial transactions globally. This standardization helps improve the speed and security of payments, reduce errors, and facilitate better compliance with regulatory requirements. That being said, there is a common point, a common denominator to all these ISO 20022 adoptions. There is a secret that you need to know as payment professional. All the schemes and market infrastructures all around the world and SWIFT have migrated or will migrate to the ISO 20022 messages published in 2019. In other words, these schemes are using the same versions of the ISO 20022 messages. ISO 20022 standards messages have multiple versions and are updated frequently, but they have reached a certain maturity level with the versions published in 2019. This explains why these versions have been adopted almost everywhere. Now, what to do with this information? The answer is simple. As payment professionals, it is worth taking the time to understand and study the ISO 20022 messages published in 2019. This naturally leads to a key question. How and where can you find the ISO 20022 messages published in 2019? One key message published in 2019 is the PAX 8 version 8. Let's go to the ISO 20022 website. To find messages published in 2019, like the PAX 8 version 8, go under the menu Catalog of Messages, select Message Archive. Type PAX 8 version 8, the whole message name under the search field, and make the search. Download the complete message set. Unzip the file. Here, you find the XSD or XML schema validation files. Note that the XSD here follow the ISO 20022 rules, not the SWIFT rules. SWIFT CBPR Plus has its own XSD files. Here are the documents where you find the ISO 20022 specifications. Let's open the PDF file and look for the PAX 8 version 8. Use the bookmarks on the left to easily navigate through the file. You can go to the PAX 8 directly. At the beginning, read the section 6.1. It is very interesting. The section 6.2 is the one we use the most. That is where we find the overall structure of the message and the specification of all message elements within the message. There are hyperlinks inside this document. Use them to easily navigate through it. The PAX 8 consists of a group header, one or many credit transfer transaction information, and a supplementary data. Click on Group Header to see the elements that are inside the group header. Now, you can click on the specific message elements to learn more about it. For example, number of transactions or total interbank settlement amount. To go back to the structure, use the bookmark. Now, you know how to find the PAX 8 version 8 on the ISO 20022 website. Take the time to study key messages like the PAX 8 version 8, the PAX 9 version 8 by reading the message definition reports downloaded from the ISO 20022 website, and you will make substantial progress. Each scheme has its own specifications and implementation guidelines, but they now have a common denominator, the 2019 ISO 20022 messages. This is a major difference compared to the past. The migration of all schemes to the 2019 ISO 20022 messages yields many advantages. One of them is that it is going to facilitate communication among banks and between banks and their customers. You got it. Taking the time to understand and study the ISO 20022 messages published in 2019 will be a great investment. Now that we have covered the SWIFT migration, let's dive into our next significant trend, a trend that is going to have a significant impact on cross-border payments in Europe and worldwide. It is the one leg out instant credit transfer, or simply OST Inst scheme. While it may seem complex at first, it is actually quite simple. You should see it as an international instant credit transfer. In the following, the focus will be on the one leg out instant credit transfer in the SEPA area, but the underlying principles apply to other regions. Let's first define what a one leg out transaction is in the OST Inst scheme. It can be seen as a transaction whereby only one of the payment service providers, either the payer's PSP or the payee's PSP, is located in the SEPA area. The scheme supports one leg out instant credit transfers in any currency, including non-euro SEPA currencies, provided that at least one of the two legs involved in the one leg out instant credit transfer is denominated in euro. The payment accounts of the payee and of the payer may be in euro or any other currency. The scheme does not set any specification about whether, how, where in the OST Inst chain and by whom a currency conversion is done. But a key requirement is that all details about the initial credit transfer amount in the other currency and about the currency conversion operation itself must be made available in a fully transparent way to the payer and the payee concerned. So, the OST Inst scheme is open to any possible currency, including non-euro SEPA currencies, provided that at least one of the two legs involved in the OST Inst transaction is denominated in euro. That's the so-called euro leg. There are two categories of one leg out instant credit transfers: an incoming one leg out instant credit transfer and an outgoing one leg out instant credit transfer. For an incoming one, the transaction starts in the non-euro leg and ends in the euro leg. You can see the non-euro leg at the debit side of the transaction and the euro leg at the credit side of the transaction. Let's look at the non-euro leg first, where we find two conditions. The transaction is originated outside the SEPA area in any possible currency including euro, or the transaction is originated in the SEPA area in any possible currency except euro. The transfer is initiated outside the SEPA area and most of the time in the currency of the country where it is initiated. So, it can be any currency including the euro currency. If an instruction is given to transfer euro outside the SEPA area, then it is not a SEPA payment. It is a cross-border payment. That is why euro is included here. For the second condition, the transaction is originated in the SEPA area in any possible currency except euro. This condition excludes the euro currency because otherwise it will be a normal SEPA instant payment. Now let's look at the euro leg in which the incoming one leg out instant credit transfer ends. In this leg, the currency of the transfer must be euro, no matter where the transaction was originated. In the non-euro leg, it is said that the transaction can be originated in any currency. Since here only euro is allowed, it means that a currency conversion is required. In general, the currency conversion is performed during the non-euro leg processing steps, even if the scheme does not oblige it. But it is a logical assumption because the PSP that does the currency conversion is also the one cashing the fees related to it. To be more concrete, let's take an example. A payer in the United States that owns an account in US dollar and wants to transfer euro to a payee in Germany. The payer completes the instruction and sends it to its PSP. On the picture, it is named Non-Euro Leg Payer's Financial Institution. Now, look at what the payer's financial institution does. It forwards the instruction to another PSP called Euroleg Entry PSP, with which it has an agreement to process euro transactions. The Euroleg Entry PSP holds an account in euro for the non-euro leg payer's financial institution. If you want your PSP to process instruction in euro and send euro to a beneficiary, you must have enough funds in euro on your account. The same applies to banks and PSP. If the non-euro leg payer's financial institution wants the Euroleg Entry PSP to process instructions in euro and send euro, then it must have enough funds in euro on its account. So we see that non-euro leg payers PSP has an account relationship with the euro leg entry PSP. In the industry, it is said that the euro leg entry PSP is the correspondent of the non-euro leg payers PSP in euro. Here we find a concept that is crucial to understand international payments and the one leg out instant credit transfer. It is the correspondent relationship. This concept is not explained in the OST in scheme, but it is crucial. It is very important to understand how the scheme works. So what is correspondent relationship? We will come back to that. Now let's move to the outgoing one leg out instant credit transfers. Here, the transaction starts in the euro leg and ends in the non-euro leg. You can see the euro leg as the debit side of the transaction and the non-euro leg as the credit side of the transaction. Without surprise, the only currency allowed on the euro leg is the euro. The payer and its PSP are located in the SEPA area, and the payer has an account in euro and wants its account to be debited and the funds to be transferred. The destination can be either an account held at a bank which operates outside the SEPA area, or it can be an account held at a bank or PSP established or licensed in the SEPA area. If the destination is an account held at a bank which operates outside the SEPA area, then the currency on the credit side, the non-euro leg, can be any possible currency, including the euro currency. Euro must be included because the account to be credited is outside the SEPA area. And if the account to be credited will be in the SEPA area, the transfer will be executed under a SEPA credit transfer scheme, classic or instant. But since the account to be credited is outside the SEPA area, it is an international credit transfer. But we see that the account to be credited can be held at the PSP established or licensed in the SEPA area. But the euro currency is not allowed in that case. Remember that many SEPA countries do not use euro as their national currency. For example, the pound sterling in the UK, the Danish krone in Denmark, or the Swiss franc in Switzerland. This condition is for those SEPA countries. To send euro from one SEPA country to another SEPA country, the classic or instant credit transfer scheme will be used. But here, it is not euro. It is another currency that is transferred. That is why the one leg out instant credit transfer scheme is needed. Logically, a currency conversion is needed here. As before, the conversion is performed on the debit side, this time during the euro leg processing steps, even if the scheme does not oblige it. Since the currency to be credited is not euro, the euro leg based payers PSP performs the currency conversion and selects the correct euro leg exit PSP to further process the payment. To understand, let's take a concrete example. A payer in Germany owns an account in euro and wants to transfer US dollar to a beneficiary in the United States. The payer completes the instruction and sends it to its PSP. On the picture, it's named Euroleg based payers PSP. In this scenario, the payer's financial institution or PSP forwards the instruction to another PSP called Euroleg exit PSP, with which it has an agreement to process non-euro transactions. In our case, the Euroleg exit PSP holds an account in USD used for non-Euroleg transfers. The Euroleg exit PSP is usually located in the non-Euroleg country, so in the United States in our example. Here again, we see that the Euroleg based payers PSP has an account relationship with the Euroleg exit PSP. The Euroleg exit PSP is the correspondent of the Euroleg based payers PSP in the non-euro currency, the US dollar. So we find again a concept that is crucial to understand international payments and the one leg out instant credit transfer. And that concept is the correspondent relationship. We are now back to this so important, to this so crucial concept that is not explained in the scheme rulebooks. You are probably wondering, what is a correspondent relationship? How does it work? How do PSPs perform currency conversions? What are the underlying models to explain cross-border payments? The answers to these questions and the questions I raised in the first video hold the keys to understand cross-border payments and cryptocurrencies. Before mastering cross-border payments, you should first build a strong foundation in domestic payments. To help and support those of you that want to move their skills and career to the next level, we have created the Payments Mastery Curriculum. In that program, you will get the keys and secrets to master fundamentals, domestic and cross-border payments. The Payments Mastery Curriculum will enable you to master payments and be successful in your payment projects. In that curriculum, there are 7 high-quality courses that guide you through payments fundamentals, SEPA and cross-border payment schemes, ISO 20022 standards, and the practical implementation of payment projects. There are also 4 private webinars covering current payment topics to help you stay ahead of industry trends. And for the first 30 people that join the program, each will receive a free 1-hour coaching session with me. We will be very happy to welcome you to the Payments Mastery Curriculum. Thanks for watching and see you on the other side.